Warm welcome, everyone. Thank you for joining us today for our webinar titled Human-Centered Explainable AI in Investment Management. I'd like to begin by introducing our speaker. Alexander Cole is the Managing Director of Product Strategy at Boosted.ai, responsible for platform success through setting product direction, feature road mapping, and delivering the best user experience. Prior to joining Boosted.ai, Alex was in charge of Uber EMEA's delivery business line and helped launch a personal money management startup in the UK. Before moving to tech, Alex was a cross-asset buy-side trader at Scotiabank's 1832 Asset Management Dynamic Funds unit. Alex holds an MBA from the London Business School, is a CFA charter holder, and graduated with a finance degree from Concordia University in Montreal, Canada. Without further delay, I'll pass it on to Alex.
Thanks, SK, and thanks everybody for joining. I know it's it's a tough market. It's a bit of a doubleheader holiday week here in Canada and the States. So thanks everybody for taking the lunch hour with me. If anybody's joining from Europe, I hope you have bank holidays because I think you should have some because we do have two in a row here. So let me share my screen and we'll get going. All right. Cool. So as SK said, we're going to talk about the human-centric explainable AI in investment management. What do I actually want to talk about? Well, I wanted to cover a number of things, starting with an intro about Boosted and how we think specifically about AI, ML in asset management. Then I'll talk about why explainable AI is important and how we implement it. And lastly, I want to talk about how we actually do it here and how we think that AI best complements your investment approach. So I'll talk about our primary analytics platform construction, our primary analytics portfolio construction outputs, which are rankings. And I'll introduce you to a new tool that we developed that deep dives into the ML decision-making process that we call Equity Explorer. I'll go over the tool itself and I'll showcase some of the analytics that you can do while using it. These are some of this tool, we just released it. It's a very cutting edge tool that I think does not have any comparables in the marketplace. And what we strive with that is for explainable AI and really making sure that AI is as transparent as possible for the end users. Without further ado, I just want to introduce us a bit and what we stand for. We believe that machine learning and artificial intelligence work best in combination with a human touch and intuition. When we build our system, we always think about, well, our guiding principles are not only making sure we build the best platform itself, but also the platform makes it easy for the end users like yourself to use it, to interact with it, to tune it to your needs, and get the best outputs according to your mandates. When we talk about ourselves, we're a diverse and complementary team, and we kind of adopt the same philosophy when we build our team. What we do have is we have a number of finance professionals, some variety of leading institutions such as Citadel, Bank of America, et cetera, that we have on staff that bring in years and years of hands-on investment management knowledge and experience and can provide that point of view of what the manager would be looking for when they're actually building a portfolio and when they're actually running their day-to-day investment management process. We combine that with a leading engineering talent with specializing areas such as machine learning, artificial intelligence, natural language processing, and we try to build a product that is best suited for you, our users. And since I joined about a year and a half ago, we've grown about 3x, and it's been great to see all this new talent coming in, bringing ideas, insights, and solutions. We serve a wide range of users. So I think there's probably a wide range of people on the call, but when we look at our user base, we range anywhere from, we go everywhere from asset managers, hedge fund managers, ETF managers, family offices, pension funds, and other more specific asset managers. AUM is also ranges from smaller funds with 10 million to 1 trillion asset management in assets under management. We also cover a lot of geographic locations. We're pretty much worldwide now. We have a customer success team that covers all the time zones to make sure that you always have the support that you need when they're using the platform. We're also backed by some of the leading venture capital funds in the world, such as Spark Capital, Tencos, and Portage. Next, I wanted to talk about a bit about actually why this ML is so important. So to answer the why part, we see the ML tools as accessory to your existing process, especially during times like now. You have a lot of things going on in the market. You have, inflation, you have the rate hikes, you have the war, you have the oil prices, you have the volatility, you have a ton of stuff going on. And a lot of these things monopolize your time and your attention. So to cut through the noise, AI is best at that. AI really can see the non-intuitive patterns that humans may miss and save you time during the idea generation and portfolio optimization process and increase that time to value of actually spotting the ideas and then bringing them to reality during your investment management process. So that covers the why part. So the next question is how to implement it. So there's a lot of, I think even when I started, there was a lot of questions about, well, the integration's hard. The costs are too high. Not really the case here, because what we've built here is a cutting edge platform that is finance specific. So we don't have an off the shelf algorithm we use. We have a proprietary algorithm that is tuned to financial services data. It integrates very well with your current process because you don't actually need any programming knowledge to use the platform. It's entirely web-based. You can be as high level as you want, as in what you see is what you get kind of usage. You can be as, you can also do a lot of deep dives into it. We have full API support, so you can actually connect it to your own systems and not even have to log in. So this platform is, lastly, is not a black box, which is we're pretty proud of, because all the questions always come up about like, well, AI just tells us what to do, but doesn't tell us why. And it's hard to build trust to some of these systems. So we really try to make it as explainable as possible. And then talking about integration again, how does this process integrate in your day-to-day life? So as I mentioned before, we think that the marriage of human intuition expertise and the machine capabilities is what leads to success. So in this diagram here, what I'm showing is that when you feed your capital market expertise, you choose what are the things that are important to you. And we have a ton of data that we're able to provide, and that's already built into the system, such as things from FactSet, Owl Analytics, S3 partners, like short interest data. We have a ton of variables. You can make custom variables. You can upload your own data, whatever you want. Our algorithm is specifically built to handle all that. And then the ML uses your inputs that you've tailored, and it provides you a ranked list of securities within your universe you specified that you can use then for research purposes or to try to trade, or if you want, you can even directly trade off of it. So that's how it works in a nutshell. And it's fairly simple to grade in your day-to-day because all this, again, is web-based and point and click. What are the benefits of all this? If you actually go through the process of doing that setup, feeding the data, what does this actually all accomplish? So once you've implemented the platform or AI ML in general, and you've had a chance to build a few models, get familiarized with it, you're able to get trade ideas. You're able to spot easier market inflection points, and some of those inflection points are probably going to be the ones you would not otherwise notice. And you can actually, when you have these trade ideas, you can easily back them up because you can strengthen your conviction through the quant lens that the AI ML provides to you. So you can have other factors that go into the trading decision that you would not have thought of, or that you don't normally look at, that can provide additional backup to your ideas, or on the contrary, it might dissuade them from doing the trade that you're thinking about doing. So we give all the power to you, and all this while having a full transparency into this decision-making process, into the features that drive the security selection, the strength of the feature importances, etc. You can really see why the machine is making these decisions, and use your own judgment to evaluate them. So I mentioned the stock ranking briefly before, and I kind of want to use this as a segue to my main topic after this introduction, because what I want to talk about is dynamic stock screening. So as I said before, on this slide, the focus is that you fit in your market expertise through the selection of variables, selection of parameters, selection of filters, whatever. We have all kinds of mechanisms you can use to express your views. Then the machine learning uses your inputs to perform the calculations, and then identifies the traditional and standard risks that are visible to you. And then what it does is returns you a list of dynamically ranked stocks that you can then use to create portfolios. So what do I mean when I talk about dynamically ranked stocks? Is what we strive, is our primary output. Our primary output is the ranked securities in which we separate winners from the losers. So we surface the stocks that outperform and underperform, arrange them into quantiles, and we use those for portfolio construction. So when we do that, how we express this is through a star system, which is a 0 stars for strong sells, 5 stars for strong buys, kind of like the hotels. And as I mentioned, because we're not a black box, what we do here is we showcase to you all the variables that go into the decision here. So if you see on the right in the screenshot, and I'll show all this live later in the platform, but just briefly, we have the negative drivers and positive drivers. We showcase to you what are the drivers that are moving the stock, and what is the importance of those drivers in order to explain to you why a specific stock is ranked a 5-star versus no stars. And when we have that dynamically ranked list of stocks, that is what the machine uses as a basis for portfolio construction. That's like our main output and the main analytics, we're going to call it main analytics output that you can use for your either a direct portfolio trading construction or for research. So how do people use this? I mean, there's a number of use cases. Every client is unique. So I probably don't have room to put all of them. So I just put 6. So as I said, dynamic stock screening is pretty important. Being able to rank the stocks and pick the winners, pick the losers for shorts. Also, people use it as machine learning overlays for part of your portfolio that is dedicated, has a dedicated sleeve, for example, that wants to use machine learning as a as a satellite of your portfolio, for example. We also have this new capability of building hedge baskets, which is especially important at a time like these when you have potential exposure you want to hedge out. And you don't want to use traditional hedging tools like say an ETF that is not very customized towards the portfolio you're looking at. We have baskets that can be generated that you can use to offset your exposures directly. Then we can perform factor analysis, understand what's moving your portfolio. As I said, some people use it with alternative data sets. If you want to use credit card spending data to inform some of your decisions, you can implement all this here. Finally, the actively traded models, you can just straight up trade off the platform and just use it as a quant engine for your portfolio. So switching a bit gears here a little bit, I've talked, so I'll kind of recap. So I did a bit of introduction, and I think the most important part is that using your expertise, you narrow down what you're interested in, and what the machine gives you the output of is the ranked list of stocks. So that's like the first layer of analysis that we've had before. And now we have this new feature called Equity Explorer. So Equity Explorer gives you an even deeper understanding of rankings and the stock selection in real time, and it helps you make better decisions. What does Equity Explorer do, and what is the problem we're trying to solve? So when we built the ranking, we thought that the main problem that is we're trying to solve is that when the machine on the ranking says you should buy a specific security, and the ranking showcases to you 5 stars or 0 stars or whatnot, and a variety of drivers, some of these drivers might not make complete sense to a human operator, or you might disagree with them. But at the same time, you want to explore them, understand, well, why are these drivers even being shown to me? So what we did is we built Equity Explorer, which actually takes this even deeper. We go inside the decision that was made in order to achieve the ranking, that stack rank, and showcase to you all the machine learning pathways that have been taken in order to rank a stock specific way. Because Equity Explorer is working with so much data and showcases you all the pathways that AI took to reach these decisions, what you can actually do with it is you can use it for stock screening and see which variables work, which ones don't in bulk. You can spot change in the market quickly through change of the patterns. So taking a step back, the way the rankings are done is the machine has hundreds of thousands of pathways it calculates in order to achieve the ranking output. So we showcase to you all these pathways the machine has taken to achieve that rank. And because we can summarily showcase to you these pathways, each pathway has a certain specific properties associated with it. You can see in real time if the properties of those pathways or screeners change. You can kind of spot where in the market the changes are taking place. So imagine this being like a EQS screener in Bloomberg, with you have a certain thresholds and parameters. If something changes in the market, some screeners will perform better, some screeners will perform worse. Whereas, except for I don't know how many EQS screens you can do, whereas the machine does hundreds of thousands of them at one time and summarizes them in a way that you can actually understand. And the best part is that if you find some patterns that work that you not otherwise would normally spot, you can also discover other investment opportunities, other stocks you would not think of, and other potentially screeners you'd not considered before. So this is a really powerful tool that gives you a bit even more better understanding of AI, and we could like to call it a glass box, because a lot of AI algorithms are kind of black boxy. We call it a glass box because you can actually look inside and see the decisions that led to a stock being selected. So at this point, I'll pass this over back to SK, because we prepared a video that explains to you high level what Equity Explorer does. And after he's showcased the video, I will actually go on the platform and show to you live how everything I talked to works. So I'll stop sharing for a second and let SK take the lead.
When you look at the market, you pay attention to a few key drivers. We call these drivers features. Equity Explorer puts you in the driver's seat and lets you choose which features should power your investment recommendations. Once you've made your choices, Equity Explorer learns the relationships between each feature and its performance across the market. It then examines these relationships and sees which combinations of features, called patterns, lead to outperformance. Take a look at the features in each pattern and check out the other securities it recommends to see if there's a fundamental theme behind the pattern. See other patterns that lead to any given security's outperformance and find the ones that line up with your investment style. As Equity Explorer learns more lessons about the market each week, you'll get fresh recommendations to help you uncover new relationships that emerge in the markets. Equity Explorer combines the power of machines with your acumen as an investor to help you outperform.
Really cool. Thanks, SK, for showing that. So I'll steal the screen back. And also this video is on YouTube. Hopefully, we tried to test a bunch of times. Hopefully it wasn't choppy for you. If it was, there's a link on YouTube that you can use to look at it again. I'll still steal the screen again, and I'll deep dive into the actual platform now. All right. Hopefully you can see the platform at this point. If you can, maybe somebody type in yes, because my Zoom is not
working well. It's working well.
Thanks. Okay, so this is what our platform looks like. As I said, it's a web-based platform that that you just use out of your browser. When you first log in, didn't go through a login screen, you're presented with a list of models. And for this purpose of this webinar, I only have one that I've pre-filtered. But normally, if you have a bunch of models, you can see a lot of them laid out here. You have access to stock universes that you operate with. We also have other tools that you can work with here, such as hedging tools that I've mentioned before briefly, that allow you to build a hedge basket if you want to hedge out your exposures. And so I'm not going to go into this now, but we covered this in other webinars, as I was talking about you being able to provide inputs to your to the model. Is how it's done is when you make a new model, you go through a step-by-step process of selecting the universe you want to look at, the backtesting period, all the variables that go into it. So if there's interest in that, please reach out to us, and we're more than happy to do a full demo. For the purposes of this, I will do a brief overview of our platform. So when you click into the model, we presented with is a navigation bar on the left that gives you access to all the screens that we have. And as I mentioned, there's some super cool features that have to do with natural language processing. we call them semantic risk factors. They pull in real time what are some of the stocks that are being picked up by the machine through language processing. We also showcase to you the explainability of the model, and one of the cool things I want to show you is a word cloud. So, for example, this is a pretty simplistic view, but I think it's kind of explanatory. As of the last rebalance for this model, it thought that the volatility and EMA and beta were the driving forces behind its decisions. And keep in mind that this is a model that is put together for the presentation purposes. It might not be perfect. It's pretty decent, but you can tailor it to any use case you'd like. It uses our proprietary algorithm called Battle Royale. It's focused on maximizing alpha over a 21-day investment horizon. It's operating in US, and it's running off of the R1K index universe, benchmark to R1K. It retrains annually and rebalances weekly. So here you have a portfolio view, which shows the performance, and this model is live, so I cannot change any of the settings. Once the model is live, it's locked in, so there's no cheating in any way. Once the model is running live, we cannot adjust any of machine learning properties or portfolio construction properties. But if you want to just have a quick look, when you're building the portfolio, there's a ton of options you can look through, trading options, optimization options, filtering, etc. There's a ton of things you can do in order to make the model really suited for your needs. We can showcase the trades that the machine is doing, all the variables that are in the model, importance of each variable while it loads. When you're looking at these variables, for example, you have some quick things you can do. You can, let's say, if you realize that one variable you don't want to be looking at, you can quickly make a model without that variable. So we make it as easy to use as possible. So for the purpose of this presentation, I'll go back to the tear sheet here. So this model is pretty decent. It has a decent quantile spread between the winners and losers, as indicated here. It's done all right in the last year or so during a tough market, and it's running, as I said, been running live for a while now. So what I'm going to now is showcase to you what I was talking about before is the ranking. So the ranking is our primary output, as I said, and the one that drives actual portfolio construction. So when I go into ranking, it showcases to me the ranking of the securities for June 27th, which is the last rebalance period, so which was this Monday. So here's what the ranking screen looks like. You have each stock here, and I have some of them pinned just because I was looking at them earlier. But mostly the stocks are ranked from 1 through 1,000 in this case, because there are 1,000 in the R1K. It showcases to you how the rankings have changed from the last rebalance. So for example, EVBG jumped 4 points, and you can quickly see here why it has done so. For your knowledge, it showcases to you which are the factors that have changed. And then it showcases to you the it's kind of a sentiment indicator here that shows to you what are the drivers that are included in what are the top 5 drivers that are driving the stock, and the strength of the signal that they are providing. So as I mentioned to you before, like again, for this EVBG, I'm just using that example. You have a lot of negative drivers, the volatility, ROA, return on assets, pre-tax income, etc. You have some positive drivers such as momentum, volatility. So these drivers are the ones that the machine is using to arrive to the recommendation. It's showing as a 5-star stock. So this is kind of where we were, up until a few months from now. We've been working on this tool for some time, but this is what we call ranking and explainability. So you can see what are the drivers that are affecting the rank, but that was kind of it. So the question has arose at as into, well, what's more, like if, let's say, I actually don't understand why is the volatility a negative driver and why is momentum positive? How has it been performing since the last model retraining? Because here we're looking at the back test. So what we've done is we've come up with this Equity Explorer tool that I'll showcase to you next. So let me pick something, let's say a Vimeo. So it has a fairly positive sentiment according to this training. And if I go into Equity Explorer, this window comes up with a lot of data, and I'll walk you through it. So the way this works is that this data here is based on the live, the training data is calculated on on the back test, and the live data is also fed into here for the calculation of the live performance, for calculation of the hit rates, etc. So we're actually looking at how the pathways that have led to the recommendation of the stock being a 5-star have been performing in real time. So again, for this example here, we're looking at Vimeo. As I showed in the previous screen, there are features top 5 features that drive it are pre-selected here. So these patterns here that you see are relevant for the stock through the fact that through selecting the features on the left, and the patterns then that are showcased to you are the ones that are capturing these top 5 and bottom 5 features. So you can kind of understand, well, how has the machine arrived to making this stock a 5-star? So how we do that is through the buy and sell signal. So all these patterns in aggregate go into this rating. And some of the patterns are positive, some are negative. Some patterns, for example, such as this one has a positive buy signal, such a pattern as this one has a negative buy signal. On aggregate, when these patterns are combined, this is how we arrive to a 5-star rating. But we want to disaggregate that and show to you how the decision was made. So I'll walk you through one by one for one pattern, for example. So if we take a pattern 1439, we can show, so we can see it's a pattern that is it's a positive pattern. A cluster score here means that what we try to do is there's probably hundreds of thousands of these patterns, and we try to make them as useful as possible by combining the patterns that are very similar into one. So for example, if you look at this style here, there are a ton of patterns that are very similar to 1908 on the negative side. This one has a low cluster score, for example. Then next is the live data I was talking about, is that we're actually looking at real time how this screener has done. It's had positive excess return. It had a hit rate over 50%. Then we're showcasing how it has actually done in the training data, and it's actually quite similar. So it's fairly interesting. This pattern has stayed fairly consistent. It has not really changed over time. The instance percentage is a percentage of stocks. Well, not percentage of stocks, but if you think about R1K, there are 1,000 stocks in R1K. There are 252 trading days a year. So each time a stock falls into a pattern, it's assigned an instance day. So here we're showing is what is the number of instances that the data set that was reflective of this pattern was active. So long story short, the higher the percentage of the instances is, it means that the more stock days and more stocks have been falling under this pattern. So which makes this pattern quite important, because in this sample here, 21% of instance days have been driven by this pattern in both, and the instance percentage has actually increased. So something changed in the market that made this pattern more relevant than it was before. So, well, now you ask me a question like, well, what is this actual pattern is, and why is this shown here? So this pattern is capturing, 60-month data, capturing alpha, regional and sector, and capital efficiency across different time ranges. So this is the pathway that has led to this pattern. The stock has fell into this pathway, and it's made a decision to aggregate these patterns, and these patterns were aggregated to assign the stock a 5-star rating. So what do you actually do with this, right? So as I said, like if you select the stock Vimeo, you look at one pattern, you kind of understand, okay, like great, so this pattern has done kind of okay. Well, why is this actually important? So let's say I'm looking at a stock like Vimeo. It's ranked 5 stars, so it's actually a really good pick by the machine right now. But if I go to this default sorting to the sorting screen, I actually have a look at some patterns that are, what are the patterns that are generating the excess return, the best excess return in training. So the best excess return in training has been generated, for example, for pattern 806, which had excess return of 8%, hit rate of 60%. So in the machine's backtest, it's done fairly well. But interesting to see that now that we're running this live, this pattern has completely done very poorly, and it's still contributing positively to the score. So we know that something has changed in the market, or something has changed, that the pattern actually is different now from what we saw in the backtest. So this pattern was based on basically volatility being very high. So let's say last year when the model was trained, high volatility apparently correlated to a high excess return, a high hit rate. It's not working anymore. So I can, with some conviction, say that we probably should not be looking at volatility because it generates really poor excess returns right now. If you scroll down a bit more and look at other patterns, you can see that volatility is something that shows up a lot. If you look at, for example, this pattern here, 2755, you can see that if you have a stock that has a high volatility, have a pattern with a high volatility, it has a not low forward earnings to price ratio, it's also not doing quite well. Well, the question is then, well, what is working? So if you sort it the other way around and look at the patterns that have not done well in training, but now have done well in live, and I'll probably have to resort it a few times to get something interesting, but so let me do this here. So excess return live. So yeah, so for example, looking at this pattern here, it's kind of interesting because in the previous iteration of this, in the model when it was trained, this pattern was a negative pattern. It had a really negative buy sell signal, and it had a negative excess return in training and pretty poor hit rate. Whereas right now, this pattern is killing it. It has 75% hit rate and it has really high excess return. All why is because analyst expectations are low in this case, and it's targeting low market cap companies. So some kind of preliminary conclusion you could be drawn here is that maybe the high analyst expectations are always as driving stocks higher, but that's not working anymore. So maybe we're looking for a mean reversion play. So anything that's mean reverting has been doing better. Same as here. We're looking at a pattern that has performed really poorly in training, but is now performing really well live, and is driven by the low price to earnings ratio. So it's a value stock, not a high beta, and earnings to price for being kind of mid-range. So you're kind of seeing that the stocks that are a bit more conservative have actually been performing quite well based on these patterns. So all that, keeping long story short, these patterns help you understand what drives these ratings. It helps you understand what's going on in the market. And there's numerous sorting options that you can play with to understand what is happening. So for example, as I mentioned before, I think one of the interesting really tidbits of information is that this pattern I was just looking at, the number of instances increased fourfold that fall into this. So the stocks with a low PE and low beta have actually been doing quite well, which is a pretty interesting tidbit of information, but machine thought back in the day that this was actually a negative pattern. So that no longer applies. So this gives you a bit of a better lens to understand that maybe Vimeo, even though machine still ranks it as a 5-star stock, is in real time potentially not a good candidate for investment, and you might want to hold off on that. So another interesting part I want to show is that here you're looking at a pattern and you can look at other securities that fall into it, and potentially you can understand, find some other names that you would not otherwise look at and see which ones of them have done quite well and potentially explore them as your investment options. Last thing I wanted to show is that, and I've been skipping on purposely because I think, a question probably would come up is okay, this is a lot of information. There's a ton of these patterns. And I didn't even touch on all the filtering options and how you can narrow them down. It's a whole separate conversation. So you can, if you're curious, for example, I want to look at patterns at EMA, you can click on that and analyze that specifically. But how do you make sense of all this? So this is why we came up with these numbers up here. So I'll kind of go through it slow because I think it's a bit of it's a difficult concept for me to grasp. So we want to take the assign a specific score to evaluate, after the backtesting has been complete, how are the stocks doing in real time. So if I fire up again Vimeo, I can see that its hit rate batting average is quite low. What is the hit rate batting average? And we're using a kind of a baseball analogy here, is that, well, if you look at a pattern that is, let's say, positive, such as this one, it's a positive pattern, but its hit rate is only 20%, that's a miss. If this pattern was a positive pattern, but it had a hit rate above 50%, that would be a hit. So if a pattern was negative and the hit rate was below %, that's also a hit. So we're kind of calculating basically a win percentage of these patterns. And that's what the hit rate batting average is. So on taking all the patterns together, the hit rate batting average is 22%, which is quite low. So what means that these patterns are no longer hitting well. So it's the same calculation for the excess return, except for the excess return is used and the threshold is 0. So if excess return, if it's a positive pattern that generates excess return, it's a hit. It's a negative pattern that did not generate excess return, it's a miss. So again, it's been doing pretty poorly. So what is, how do you actually put this in practice? And which is where the slugging percentage comes on. And, opposite of how the baseball terminology is used for slugging percentage, what we use, it's not like just a kind of a on base rate or win rate. It's a number that goes from minus 100% to 100% here. And it gives you a better understanding of, let's say, like of all the patterns we found, how have the stocks performed in live market conditions? If slugging percentage is really high, in general, the patterns are working as buy. If they're really low, in general, the patterns are working as a sell signal. How is that calculated? So again, here the slugging percentage is using the same hit rate, the batting average methodology, except it's also adjusted for the strength of the buy sell signal. So let's say if the pattern is positive and it's a hit, and I'm talking about excess return here. So let's say it's a positive pattern and generates a positive excess return. It's a hit and it will move the slugging percentage higher. If it did not get a hit, but it was supposed to be positive, it will move the slugging percentage lower. However, on the negative side, if the pattern is negative and it did get a hit, it'll move the slugging percentage lower. And if the pattern did not get a hit on the negative side, it'll move the slugging percentage higher. So it's kind of like a barometer, or if you want to look at it, it's kind of like a scale of a sliding scale from negative 100% to 100% that tells you which direction is working well. So if I combine this with, let's say, Vimeo here, which is 5-star rated stock, we can look at the slugging percentage, and actually, by just a quick look here, we see that the batting average is pretty low. The slugging percentage is very negative. So it's actually telling us that the patterns are not working really well as a buy signal, they're working well as a sell signal, So this gives you additional information to consider when buying the stock, because what you can think about is that, well, how can I use this? And if you think about the market conditions, if you feel that like nothing has been working for the stock right now, if you think the market conditions will persist as they are, you should probably sell the stock. But if you think there's probably a mean reversion happening because nothing's been working, but the market conditions are about to change, maybe it's a good mean reversion play to keep in mind. So here it's potentially a contrarian play. If we look at some other stocks, for example, such as, as we looked at the patterns in Vimeo, we saw that the stocks that are, low beta, have low expectations, sort of the value stocks, those are the stocks have been doing much better. So kind of like if you call them, defense stocks. So if you look at some of the defense ones, I'm kind of curious what is happening with those in real time. Let me find something, let's say, that is Colgate. So as we know, pretty boring company. So if you look at Equity Explorer for that, it's ranked 4.9 stars, and its slugging percentage and its excess return batting average are actually pretty good. So it means that whatever machine thought has been working for this company is still working now. So if this still tells you to buy Colgate-Palmolive, you should probably consider that as a buy if you think the market conditions will persist, and then you have a stronger conviction of going in and actioning on that, because all the patterns and all the machine learning decisions that have gone into this recommendation are still valid. So, just to make the example stronger, if I go into other things that are defensive, let's see, what do we have? Coca-Cola, for example. Expand the row, and I'm guessing that Coca-Cola will have a pretty high slugging percentage and batting range. It's not as good as Colgate, but the case still stands. More defense stocks have been doing better and have continued to do better. Therefore, it's still potentially a signal that is valid. So I'll pause here. I know it was a lot. I'll pause here for some questions, and we'll go from there. But I think this is a very valuable tool, and especially in these tumultuous market conditions, it really helps you to understand what is going on with your model in real time, and to take a more active approach to your portfolio management and understand the decisions better, be able to back them up and evaluate them. So thanks everybody for listening, and I'll pass it back to SK.
Thank you, Alex. We have some great questions in the chat window. Let's try to get most of them with the time we have at hand. Number one, what are key market change indicators for your platform?
Sorry, key market change. Okay, so like key market change indicators. So yeah, if I go back to just one, like these patterns, for example, where I was looking at instance changes, you can kind of see if you want to, like there was a lot of sorting options. If you want to sort by which patterns had the lowest instances of occurring and now they're highest, you can kind of see which are the equity screeners that are working better now. So you can see which how the market conditions have shifted and what are the features that they shifted for. Also, we have other things such as natural language processing. So we can kind of see what the machine factors are indicating for what the stocks are in those machine learning factors. So you can kind of see which are moving. You have things like factor timing, which can better help you understand what were the factors that are moving the overall portfolio, such as volatility, momentum, growth. So we have a number of factors and a number of ways to represent them graphically or visually that can help you with that.
Thank you, Alex. Next question asks, how does Boosted.ai differentiate itself from other AI players? And they've asked for one specific player, Toggle.
Yeah, I'm somewhat familiar with Toggle. I think because I use interactive brokers for my PA, so I think it's integrated there. So it gives you like a sort of, I would think because the stock moved by 5% last week, it's going to move by another 15% last week. So I think the difference is that we're kind of a full suite solution that goes from creating your own inputs, your own data, having the proprietary algorithm to process it, and then extracting the value from it by either having a stack ranked list of stocks and further going into building portfolios and optimizing them. So we're sort of a full scale solution that is very customizable and marries the human expertise with the AI, with the ability to actually see how the machine learning makes the decisions. Where I think something like Toggle is more of a retail product that just gives you some sort of insights that are not really clear, that are based on some sort of trend following methods, but it's not as advanced, and I would not use something like that for institutional asset management.
Thank you, Alex. Next one. I'm interested in merging the traditional macro investing framework with modern quantitative tools. Do you want to say any, or have any comments for that?
Yeah, I mean, we kind of went through that in my intro. So how to merge the macro investment process. So as a macro manager, you look at a lot of variables that are macro specific, and those are all the variables that we have that you can integrate into your models and build the models based on. As your views change, you can adjust them, you can tailor them, and you can use the outputs not necessarily as a as a portfolio building tool, but more of it as a macro research tool. You can see into those aggregate views, what are the sectors that are moving, what are the factors that are influencing the portfolio building decision the most. So you can use this not necessarily as like a stock picking machine, but also as a more of a market analytics platform as well. So which I think would be kind of interesting for a macro investor too.
Great, thank you. Is feature importance or signal strength based on Shapley values?
Yes. Yeah, I guess that's it.
Great. How do you educate your clients on the AI black box? Second part, are people comfortable with the black box as long as they see an ROI with the solution?
Yeah, I guess it depends. It depends how you define your ROI, I guess, right? Like if you only care about, as I said, like something like Toggle provides, which is a kind of tidbits, quick sort of snippets of output, then your evaluation of that tool might be perfect for you. If you're looking for a more advanced platform, your ROI decision is based on how much you can do with it and how transparent it is. So we're continuously educating people on this glass box concept and making sure that we actually follow what we preach by making the AI and ML engine as transparent as possible and as visually appealing as possible and as user-friendly as possible. So it's a constant work in progress. Like even here, when I was showcasing to you the rankings, we had this sort of explainability level before. Now we have way more with Equity Explorer, and this is only the first iteration of it. There will be other ways that you'll be able to take advantage of and make decisions quicker and with more precision.
Thank you, Alex. Next one. Is there a separate fundamental valuation module, or are fundamental and technical inputs all mixed by the AI model?
Yeah, so like the variables, they can be, yeah, so like long story short, they can be mixed, they can be separate, they can be, you can separate fundamental variables from technical variables, you can mix them together. And I think one cool thing is that you can actually try different iterations of it. And as I was showing to you before, you had the feature importance screens that showcase to you how each feature that you used is affecting the model's decision. And if let's say you just throw a bunch of features at the wall and see which ones kind of stick, you can actually then rebuild the models quickly and adjust those features to tailor your models better. So it's much easier to just try, and it could be a system that uses any kind of variables you can throw at it.
Thank you, Alex. Does this method work on longer time frames? I noticed that turnover rates are quite high, and how can this be used for individuals? Yeah,
so longer time frames. So like right now, so our backtest, you can set custom backtest. I think the model I was showing you was set for 8 years backtest, which means actual training starts even 8 years before that. For the Equity Explorer part, because the goal here is to showcase to you how it's doing live, you only can go back as far as the live component is. On the live data that is, you can look at the historical patterns, but on the live component, you can only see, you're limited by how long the model has been live. So in our case, that I was showing, I think we had up to 1 year, but potentially if you run a model for 10 years, you can have access to much longer than that. And sorry, the second part was, what was the second part of the question?
It said, how can this be used for individuals?
Sorry, like I think there was something before that too.
Sure.
Can you maybe rephrase the question?
I'll read it out again.
Yeah.
Does this method work on longer time frames? I noticed the turnover rates are quite high.
Okay, gotcha.
And how can this be used for individuals?
Yeah, okay, so okay, on the turnover rates, I think with models without optimization can have quite turnovers, especially if they rebalance. If you set the rebalance to be daily, you will therefore force higher turnover. If you set the rebalance to be less frequent, like such a weekly, monthly, the turnover will be less. It just depends on the settings that you set it for. However, there's other tools that we have. I think we have 3 different ways to reduce turnover at 3 different stages. So it's just whatever you're comfortable with. If you want to reduce turnover manually, you can just set it to lower rebalancing rates, or you can cadence. And if you actually want a higher rebalance, but you want to reduce the turnover, there are tools in the platform that let you do that by either keeping some stocks unsold, even though the rating unchanged, even though the rating changes, by just trying to reduce the turnover through machine learning. I think that way you have just way more options on how you want to manage that. And how can it be used by individuals? I guess, yeah, I'm using it. So it's, if you look at your stock universe you're interested in, you put the variables that you're interested in the platform, and you tailor the model to achieve your result that you're looking for. It depends on your mandate, but it's pretty user-friendly, so it's fairly easy to use.
Thank you, Alex. We'll just take one last question. I know we're over time. Does the system support only equities or also credit markets?
It's only equities for now. Just straight up cash equities.
Awesome. Thank you, Alex. Thank you for taking the time today and doing a great presentation. I'd also like to say thank you to everyone who joined us today. The presentation recording will be sent in an email within the next day. Have a great rest of your day, everybody. Thank you for joining us. Bye.